to be moderating this panel on Greek capital markets with such distinguished guests. So, as you heard, we had an extended period of financial crisis that lasted for over a decade. And then we had the pandemic crisis for 2 years. Greek economy appears now to have turned the corner. We have had a significant growth rebound, and the outlook is generally positive. I hope the previous panelists convinced you for this. In a parallel course, you know, the Athens Stock Exchange has displayed a surprising resilience and is now moving forward for further growth. What we want is the exchange to foster the development of the economy, to grow in size, given that it's relatively small to the GDP, and there is a lot of potential there. In 2021, the capital raised exceeded 8 billion euros, which was a high for 15 years. And up to date for 2022, as was the case in 2021, the ATHEX index is outperforming most of the top markets. So we all overall have a very positive momentum in capital markets. And the challenge is to maintain this momentum, to support it further with new initiatives, and to ensure that the Greek capital markets will be relevant and perhaps predominant over competing offerings. So now I would like to turn to our speakers. I don't want to take more of your time. I will introduce you to Dr. Vassiliki Lazarakou, who is the chairman of the Hellenic Capital Market Commission. She's also a member of the Board of Supervisors and of the Management Board of the European Securities and Market Authority, ESMA, and a member of the International Organization of Securities Commissions Board, IOSCO, and chairs the European Supervisory Authority's Joint Subcommittee on Securitizations. Vassiliki has a doctorate in law, JSD and LLM from NYU, from this city, and a bachelor from the Law School of the University of Athens. She's admitted to practice in Athens and New York, and has, of course, expertise on capital markets, M&As, privatizations, corporate and commercial law. She has been practicing as a law partner for more than 20 years, and has also been a vice chair of the Capital Markets Commission in the period 2012 to 2015. So, Vassiliki, during your tenure at the HCMC, your last time, we have observed certain positive changes in relation to the supervisory approach of the Commission, and the release for the first time in the history of the strategic plan. What is your strategy, particularly with effective market operation and supervision?
Thank you, George. Thank you for the introduction. And actually, I'm very happy because we are both NYU alumni. So let me just start. Good morning to everybody. Thank you for the invitation. I would like to thank Mr. and Mrs. Bonos for the invitation to the Capital Link. It's a great pleasure and honor to be here with you. Yes, indeed, it is the first time that the Capital Market Commission issued a strategy for 5 years. It's a 5-year strategy plan, 2022 to 2027, which actually includes our priorities. And it will be the first year that we'll also issue a work plan, an annual work plan. So each year now we're going to issue annual work plans, and this is with the assistance and in cooperation with the Minister of Finance that we have decided to progress and to have these changes. So this is very important, and if I may say, the focus on the strategy is mainly on the digital transformation of the Commission, and it is very important that we are getting, we have been approved, our application to get funds from the RRF for the such enhancement, let's say, for the digitalization, for the digital transformation of the Commission was approved. So now we are going to have this the next day. We are going to get exactly what we have always thought that it should be in order to have a more efficient, in our view, and let's say, supervision. And actually, that was one of my personal visions from the first moment I was appointed in the Commission, because I think that new technology, leveraging new technologies, is one of the most important things for a supervisor. So this is one focus. Then the second focus of the strategy is to endorse of course, the ESMA and the EU priorities, such as ESG. For us, ESG, for all the European supervisors, is something very important. And this is one of the issues that we are going to have in the next 5-year plan. And the third is to continue the simplification of procedures in order to make sure that we can process in a more expeditious, let's say, way a lot of issues that we're having. For example, one of the first things that we did is that we try to simplify the procedures in order to get approval, in order to have approvals of the prospectuses when a company wanted to get listed at the ATHEX exchange. So we managed, when we also assisted, so that the procedures are much faster, and plus we are accepting the prospectuses also to be in English, which will help combined offerings if that is the case in the Greek market. So we have these changes, which we consider very important. And we will continue to simplify all relevant processes. Now, another thing that we try to do, and from the first moment, is to enhance the prudential supervision in a way that we are always in continuous communications with our supervised entities in order to make sure that they have guidelines. We provide guidance in respect of necessary issues, especially when there are problems in interpretation of the relevant legislation. So that was, again, a very important priority, and we will continue our efforts to this end. And also, what we have tried from the first moment to do is try to enhance further our presence internationally. And we have succeeded in doing that. Our people at the Commission are participating very actively at the works of all the standing committees of ESMA. ESMA is the European Securities and Market Authority, and we are members of ESMA, so we actively participate. I have been appointed also in the board of directors, as George mentioned, and also in IOSCO. So we are very active in the international arena as well. And what we have also tried to do is to see in which ways we can further assist for the leveraging of the Greek market, and so that the domestic capital market can be a key driver of growth for the Greek economy. As George mentioned, last year, and I'm sure that Yianos Kontopoulos will focus also on this, last year, 2021, was a year for the capital market raised above 8 billion, which was like 5 times more than the previous year and 10 times more than all the previous years. So the Capital Market Commission is willing, and what it does is try to assist the listed companies in order to make sure that they can use the capital market in Greece in order to raise capital. Thank you, George.
Yeah, I think, you know, the supervisory model has changed significantly. The Capital Markets Commission is much more extrovert, is much more trying, you know, to preempt developments and to influence, you know, European developments, and is also giving guidance instead of, you know, just giving fines to the entities. I think that's a, you know, very important changes we see in the market, and of course there's a lot of, you know, new things to be done. I mean, fintech and you know, innovation to be, you know, encompassed. But I think there are also a lot of things to be done at the stock exchange level. So let me introduce you to Yianos Kontopoulos. Yianos is, since March of this year, the new CEO of the Hellenic exchanges, Athens Stock Exchange, and all the subsidiary companies, the clearing house and the Central Securities Depository. Prior to joining the ATHEX, he was the CQS's chief macro strategist, and before that he was the global head of macro strategy at UBS. Until 2015, he worked with the Eurobond Group, where he was the group CIO and the CEO of the asset management firm. Previously, he was an economist for Salomon Brothers and the top-rated Merrill Lynch global FX strategist and research manager, and the hedge fund founder. So he has a great experience in the financial sector. Yianos holds a PhD in the Master of Philosophy and MA in Economics from Columbia, so another, you know, New Yorker kind of person, and a bachelor degree in Economics from Harvard. So Yianos, as the relatively, I would say, new CEO now of ATHEX, what's your vision and strategy how would you like to position the Athens Stock Exchange in the global markets, and what's your plan?
Okay. How long do you have? So, look, I have to say I'm surprised that this is probably the first time in the 8 months that I've been around the stock exchange that I heard in your opening remarks something positive about the Athens Stock Exchange. So I thought I was listening to myself at some point. So, but the reality is that we are starting far away from where we need to go, and where we need to go doesn't necessitate, I think, vision. Probably a little bit more pragmatism and a plan, and we just want to be normal. And what does normal mean? I think we deserve to be the leading exchange, at least in the region. We need to make sure that we offer the opportunity to listed companies and entrepreneurs from Greece and abroad to raise capital in Greece and fulfill their targets for growth. We need to be able to deploy top technological solutions in terms of our trading engines and everything else that we provide technologically to our market members, so that they in turn offer the right solutions to their clients for their diverse investment needs. And as a result, we contribute to wealth creation, not only for Greek investors, but also international investors. To do that, I think the primary target is pretty basic. We need to concentrate on reactivating the IPO channel in Greece and ultimately be a serious contributor to the long-term growth prospects of the private sector and ultimately the long-term growth prospects of Greece. That's part of the role. Another one, and Ms. Lazarakou mentioned it also, and I think it's a significant dimension of our role as a capital markets institution, is to assist our listed corporates on their path to good governance and ESG disclosure practices, which means that we have, and I think will continue to become the go-to place for this ecosystem to provide the resources and the platforms for them to fulfill those needs in a seamless fashion. And we have work to do on that front too, because things are moving very quickly, and it's quite likely that they will become pretty standard as time goes by, not only for listed companies, but also for large not listed companies in Greece and elsewhere. So what do we do? What's the plan? I think I have about 30 seconds for that, so hopefully we'll get a follow-up question. Look, one of the main dimensions here is that we need to go out and educate the market, not only about the Greek growth prospects, but also on the growth prospects and the results of the Greek corporates. After all, we've had 2 years in a row of record earnings from most of the major Greek corporates, so it's not one or two that they managed to meet that milestone. And they did that in a year which was also particularly challenging, like 2022. And this is one of the things that the market doesn't necessarily pay attention to. And then provide also opportunities to explain to our audiences, both locally and abroad, about, as Ms. Lazarakou and you mentioned, that even when you're thinking about the Athens Stock Exchange, and admittedly we have relatively low liquidity compared to our past, and very limited number of IPOs, when there is a good product in the market, when there is a good corporate that comes to issue in the Greek Stock Exchange, there's plenty of demand, and we're the true gateway for both European and international investors that are looking to invest in corporates with Greek DNA. So we need to be a lot more extrovert. I need to travel even more and come back to you and keep repeating the message, because my experience in interacting with the markets is that repetition is key. And because we are starting from a very significant negative branding, whenever we think that we have done enough, we need to do more. So that's the part about extroversion. And the other part is to make sure that we solve all our technical issues, if there are any remaining. I think we're very close to being done with respect to what organizations like FTSE and MSCI and S&P would look at and say, okay, do these guys meet their technical standards that they need to? And the answer is yes. So we check that box already, and then make sure that, again, we communicate that to the markets, and so on and so forth. And obviously, and more importantly, to reach out to the corporates and make our pitches and be convincing.
Thank you, Yianos. Yeah, I think it's an interesting vision. So I will go now to Anastasios Astyfidis, who is the founder and CEO of Ambrosia Capital, a highly accredited capital markets advisory and asset management firm. Most of Anastasios' career prior to Ambrosia was with Deutsche Bank in London, where he was one of the founding members of the principal strategies group that invested the bank's capital in debt and equity and derivatives. Before that, he worked at Citigroup in the structured products and derivatives group, where he was pricing and trading derivatives for Citigroup structured funds. And he holds a master's in financial mathematics from University of Edinburgh, so you're not from New York, at least from
the exception.
And a bachelor in mathematics from Patras. So Tassos, Ambrosia Capital now is set up in Greece for 2 years, and over a decade in the UK. You have heard the vision of the Capital Markets Commission, the vision of the stock exchange, and how do you perceive the main differences between the two jurisdictions, and how this vision our market players and regulators have would kind of help bridging the gap and pushing forward the Greek markets.
Okay, well, first of all, thank you very much for having me here. We are now spending our second year set up in Greece and regulated by the Capital Markets Commission and in partnership with the Athens Stock Exchange. It's great to see that the Capital Market Commission is more extrovert and working closely with ESMA. Also being on the board is a great honor for Greece. Things that you've highlighted, like digitalization and fine-tuning the offering memorandum process, will help a lot. Same for the Athens Stock Exchange. We need systems, we need technology to extend to our clients, and we need also more product. We need the product to have more ideas, more sectors represented in the Athens Stock Exchange. There's very vibrant parts of the Greek economy that are not even present, such as hospitality or pharma sector. Even technology, we could have more of that, and we've seen some great success stories there. So we really hope to be part of this effort to tap this potential. And we're very happy. It's a good time for Greece, and we hope that in the medium term we'll keep enjoying such above average growth and vibrant capital markets.
Well, you prompt me now to put the next question to Yianos, because you talked about product and there is a big discussion about blue chip companies, particularly from the public sector, coming and being floated in the market. Particularly mentioned the Athens International Airport, which is like a blue chip kind of infrastructure company, and of course this is a decision made by the government. So what can the government do to promote this? How can we get more of these companies in the market? And what other initiatives from the government would you want to support this effort?
Well, look, the important thing is in this particular dimension, actually there are a couple of important dimensions. The first one is the signaling one. There's been a number of assets that have been privatized over the course of the last few years, and the Athens Stock Exchange hasn't been the go-to place. So with the government having changed tack and prioritizing on the redevelopment, let's say, of Greek capital markets, I think they now have been signaling that they want to do something towards that direction. As you say there, it's the decision and the significant work effort of TAIPED and other government entities that they need to get this done together with the Capital Markets Commission. But I think that if it happens, it will be very significant, because the size of the transaction is also fairly important. By itself, getting that type of flow in the market will mean that a lot of portfolios will need to be rebalanced. You will attract a number of different international investors that this is, the Athens International Airport is a unique asset with very special characteristics. And as they come, they'll typically ask what else is available in the Greek Stock Exchange or what else is not available in the Greek Stock Exchange, and that will prompt interest and it will prompt, I think, additional work by the whole ecosystem. So it's going to be a significant, it's one of those elements that I describe as the way for all of us to change the negative narrative around the Greek story, especially with respect to capital markets. You need to get those surprises that make you turn your head and rethink of what Greece and its assets have to offer. So this is one of the critical aspects that will open the door for other important transactions, again from the state, but we don't need to rely on the government only for that. I think if they make the beginning, that's a good way for other large ticket items to come to the market because they'll realize that the demand is there. And I think, one thing will lead to the other important part of the chain. So getting it started sometimes is the important thing.
Yeah, I think the change of the government policy from trading and selling to strategic investors, government assets, and not taking into account the multipliers that the listing could bring is a good thing for our market. The product needs to be expanded, I think, and to get forward with all this, get new companies in, and of course rebalance a little bit the weight, because right now banks have a very significant part in the market and have been very volatile and capital demanding for the last years. Now, of course, this has changed, and this is partly the reason why the stock exchange is overperforming, I would say.
Well, it outperformed also in 2019 too. So it's not just a one year in thing, and I think that's because of the whole picture of the Greek economy, right? I mean, it's something that people haven't necessarily realized, but ultimately over time, the stock exchange will reflect the prospects of the overall economy.
Now, I will go back to Tassos, and there has been a discussion to getting the developed market status for our market, and I'll ask first Tassos. I mean, if he wants to comment on that, about the good and the bad things for that, and then of course Yianos, if you can do a follow-up comment.
Accession to develop market status is a very good thing, especially for credit and the bond markets. It can also be very good for equities. It needs to be managed carefully though, because we'll be changing audience, and it takes time to educate new clients. And if you look at other accessions, like market tends to rally very hard into the first upgrade, into the second upgrade maybe, but then unless it's managed carefully, it could be tricky. Strong pension plans and committed capital to invest in Greece could help manage this more efficiently, as they're going to be before and after present.
Yianos, you want to comment?
Yeah, look, what you're describing is a good problem to have. So if it rallies first and rallies second, I think nobody will be complaining about this. Just to give you some context, basically Greece was re-rated downwards into emerging market status back in, I think, 2012, if I'm not mistaken. And that meant that, branding-wise, I think that's an important downgrade, but also introduces you to a very particular group of investors. The whole argument is that you can be a relatively big fish in a small pond, or if you go to the developed market status, you can be a small fish in a bigger pond. There is a little bit of an argument from my experience in speaking to the market on whether we would like to make all the effort to graduate to developed market status again because of that argument, that trade-off. But personally, I think it's a false debate. at the end of the day, look, everything that we do that will get us to developed market status, it will mean that we'll be successful in terms of raising capital and fixing all the minor issues or big issues that we have left. And at the end of the day, if it doesn't look that it fulfills our targets, I can always pull the plug and go back to emerging market status. So there's not much lost, but I cannot do the opposite. So I'm very much in favor on doing all the work and getting us in line to make all the arguments and tick all the boxes to graduate to developed market status.
Thank you. I personally think it makes sense. I think it's a difficult path. It's a risky path because you'll have investors moving in and out of the market, and this needs to be kind of timed properly. But I think it's a challenge we need to take, and of course Greece getting the investment grade will of course help and be a good combination. It's not going to come one after the other, but it's gonna be a good support. So Vassiliki, developed market status means even more things for you to do, I guess. Closer supervision, more efficient. So what are your thoughts? And of course you as a supervisor, and the Greek Securities regulation is basically based on the EU rules. So what flexibility, what leeways you have, what's your plan there? Can you be a little bit more granular here? Thanks.
First of all, let me say that the regulatory and legal framework will not be an issue for getting the status, since we do have, as you mentioned, George, the EU regulatory framework is where our laws are based. Why is this? Because in Europe, as you know, especially for capital markets, we either have regulations, which is a trend now, to have regulations which are implemented directly in every state, or have directives which have to be implemented into national legislation first. So either way, we do share the same framework among EU countries. So that will never be an issue in case we want to speak about this. Now, the only, let's say, law that could be different amongst member states could be corporate governance. And this is why the last couple of years we have amended the corporate governance law, and now this new corporate governance law is in alignment with the best practices of OECD and with the principles of OECD. And we are very happy because now the Greek companies, at least, can take advantage of this corporate governance law in order to fulfill the G criteria of the ESG, which is a very important, which are very important criteria for the years ahead of us. So that means that from a corporate governance point of view, we are fine, and also we're going to have a review the next years, because right now the OECD principles are getting amended after 7 years. So it will be the case that after some years as well, we're going to do the same in order to incorporate the new principles of OECD. Now, having said that, of course, we're going to continue our efforts in order to have supervisory convergence, because this is what all of us, all the 27 European commissions are right now working on, to make sure that we have supervisory convergence and that all the rules are implemented, the EU rules are implemented in the same way among all of us. So these are going to be one of our main priorities in the years ahead, to make sure that a company that wants to be listed in Greece, but wants to have, let's say, wants to get also activities in other countries, will have the same treatment wherever it goes. So for us, this is very important, and we are always working on this.
Thank you very much. I see that we only have 1 minute left, according to Mr. Bornozis, but he's not around, so maybe we can squeeze another minute or two. I don't know if you have any questions to address to the panelists? Okay, so there's no questions. Okay, so we've been an excellent panel without any questions.
I think we hypnotized everyone.
Yeah.
Maybe it's worth taking advantage of the time, just because it was mentioned. And look, there's always whenever you try to change things, one is trying to pass the ball to the other guy. So, when we say new product, I can turn to Mr. Astyfidis and say, where is the new product? You're supposed to bring the product. I'm the market. But either way, we need to learn to cooperate. And I think that's one of the main implications, I think, also from our strategy and our way of thinking. Capital Markets Commission, the brokers, ourselves as the infrastructure, we need to be visiting companies together and figuring out exactly what they want, on some occasion bringing the government in and making sure that everything works in the best possible fashion, and really convincing them to take the step. In some cases, we need to be extra imaginative. How can you bring large companies to Greece if you're wondering whether a 200 million IPO will do well or not? So what could we do? In my mind, dual listings are an interesting way around the problem. It's not a straightforward one, but we spent in the last couple of days together with Ms. Lazarakou and a number of my staff, meetings with DTCC, advisors here in New York, the part of the ecosystem here to find out and to get them convinced that this is something they would also benefit from, meeting with folks from NASDAQ and New York Stock Exchange and trying to cultivate the impression that having a dual listing of a Greek company or a Greek DNA company, as I call them, both in New York and Greece, offers a very particular set of incentives, because there is a very large pool of European money that can only invest in European assets. The added trading hours allow you to navigate in a much more efficient way a turbulent market cycle. And to just give you the illustration, if you wake up and you find out that a missile has flown into the wrong side of the border, the typical reaction is for you to sell your position immediately. But if you know that you have additional trading hours, you will only sell a third of that position, and so on and so forth. The fact that a $1 or $2 billion company in New York is going to be one of 1,000, but in Greece is going to be a national champion, has a very significant difference. In what way? In the way that it will be part of our index, and all the passive funds will automatically invest in those companies, and so on and so forth. So these are the types of discussions that we try to go over to make sure that we don't stand there and wait for the solution to come from the sky.
And also, if I may add, since we have time, it is very important. I want to add to what Yianos Kontopoulos just mentioned about where we are going. I think it is very important that right now we have excellent international cooperation among also the commissions, among at least the Greek Commission with the others, because that will help in the international environment that we're now living.
Well, just as a market participant, I just want to say that I see, and I hope you saw that, we're having the right pieces falling in the right places for the capital markets. We have, a new supervisory approach. We have a new vision for the stock exchange. We have a governmental, strategy for this and support. And so I personally am very optimistic about our markets. So thank you very much for your time, and hope you enjoyed our panel. Thank you.